The first wave of bank results are out. Wall Street wasn't initially impressed. Why? A lot of that had to do with the outlook and the commentary that we got from CEOs on the call. So let's dig into some of these common themes. First up, we want to talk recession. JP Morgan CEO Jamie Dimon shifting his tone after warning of an economic hurricane last year. He's now calling for a mild recession, and he is far from the only one. We certainly heard that from Citi CEO Jane Fraser, also Bank of America CEO Brian Moynihan. Now, Fraser went on to say that we've built reserves in personal banking this quarter on the back of volume growth, as well as that anticipation of a mild recession. Moynihan went on to say that their baseline scenario contemplates a mild recession. So, Dave, recession was heard a number of times, but I guess if you want to take the optimistic view on this one, it's only mild.
What does that mean? Define that.
Hopefully it won't be that bad.
I suppose. I couldn't help but wonder if they coordinated this reference, because you heard mild recession in just about all of the commentary from the big bank CEOs. It seemed to be almost a coordinated message if you were just dropped down on this earth. The one thing that really scared me, though, was Moynihan suggesting a 5% unemployment rate through 24 and a potential for a 5.5 unemployment rate, which is scary. Folks, we're at a 3.5 right now. JP Morgan CEO Jamie Dimon, we're all waiting on these words. And here's what he said. He's focused on geopolitical events. We still do not know the ultimate effect of headwinds coming from the geopolitical tensions, including the war in Ukraine, the vulnerable state of energy and food supplies, persistent inflation that is eroding purchasing power and has pushed interest rates higher, as well as the unprecedented quantitative tightening. Now, what we didn't hear when he talked about geopolitical concerns is I wanted to hear something about reopening in China in terms of optimistic tailwinds. Didn't reference that when discussing all these events going on around the globe. Was a bit surprised, but again, he seems to agree on the side of mild recession.
Yeah, and also the loan loss reserves, right? That's a number that we've talked about very frequently over the last several quarters. JP Morgan, Bank of America, Wells Fargo, all adding to that. JP Morgan actually adding $1.4 billion to loan loss reserves in Q4. Bank of America provision for credit losses growing to $1.1 billion. Wells Fargo, $957 million. So there is some concern out there in terms of what we could see over the coming quarters. Consumer was another common theme, just in terms of the strength of the consumer, maybe lack thereof. Although it was a little bit more upbeat and optimistic than I had anticipated that we would be hearing. Dimon saying that the consumer's still in good shape. Brian Moynihan saying consumers, quote, have plenty of cushion left, although he did comment there, go further, saying that some of that spending growth is slowing a bit. Well, you take into account the higher prices, the looming recession, the fact that consumers have been holding up and actually stronger than we had anticipated, I think that's pretty good.
Yeah, Moynihan did say outstanding credit balance is up 14% year over year, and did say delinquencies are beginning to rise. We expected, at least I did, expect to hear more about layoffs, because we did hear the reporting that Goldman Sachs, who reports next week, will lay off 3,200. Didn't hear a whisper other than that, which I think was surprising and gives you some optimism going into the year when you thought you might follow suit from Goldman's.
Yeah, certainly, because I think a lot of us were bracing that we would hear about more cuts and layoffs here. But actually, when you take a look at these headcount numbers, JP Morgan, Bank of America, both of those banks had higher headcounts than they did the previous quarter. And Bank of America going on to say that they have no plans for job cuts at this point. So pretty optimistic when you take into account where we are today.
Absolutely, no question.